very much oversold. I don't want to sound like a technician, but oversold conditions. And while there still may be downside after this decline that we've had, if you're waiting for a $2 or $3 decline to take risk out of the market, when you get a $2 decline, like we have in silver for the last week or so, you have to adjust accordingly, and there's $2 less risk in the market this week as there was a week and a quarter ago. So you have to become more bullish as the price goes down if you're a value/commitment of traders analyst, which I am.
And for people who are looking to accumulate, obviously you want to welcome these declines and not panic, because this is a chance to add to your positions at lower levels, which is exactly what you were just pointing out. Were there any alerts you put out?
Well, I wouldn't call it an alert, but I did put out early in the week on Tuesday, after the close of business on Tuesday, to subscribers, basically that I had commenced on a personal basis some scale-down buying with this decline that we've had and anticipated further decline, and been buying through the week. I think that anybody who had some dry powder, which I kind of suggested for the last couple of months, to those people that approach the market that way, keep some dry powder when the risk is high, that with the risk coming down now because the prices come now, that dry powder should be deployed. If you're saving dry powder for a rainy day, this is what you're saving it for. And you want to put it to work. Certainly any further declines, price declines, you want to put to work. This is, again, if you're saving dry powder, you're saving it for a time just like this.
James Turk always talks about dollar cost averaging, which is a really good way to look at the markets, and I think always buy into these declines. It just lowers your cost average rather than chasing things to buy these declines. Always a good idea. Even if they're going lower, just continue to purchase and make those purchases into the decline and dollar cost average them, which is basically what you're saying. Would you mind expanding on this? Because this is the first time on air I think you've talked about putting out a buy alert, or what you're doing actually with your own money. This is what your subscribers are getting a sneak peek at. Is that right?
Correct. Basically, it's, there's no secret. It's telegraphed beforehand. If you are expecting a risk in the market, there is a risk in the market of a $2 or $3 sell-off, just to try and quantify it a bit. You can't be that precise. When you get that $2 or so sell-off, then you have to sit up, put your plan into force. What happens on these declines, in addition to improving the commitment of trader structure, just the fact that the price goes down, is basically removing risk from the market, and that's always a good thing. And it's also expanding the profit potential. Because one thing I would like to point out, especially in the case of silver, is that it's not just so much that the risk is being taken out and that you'll be able to get in and deploy any unused funds at lower and more advantageous prices. The flip side of this thing, and it's a little bit unusual in silver, is that when this thing is resolved, when we stop going down, whenever that is, and we start to commence the next rally, and there will be obviously the next rally, when that occurs, I have the strong suspicion that this is going to be a rip-roaring rally to the upside. I'm more convinced of this price explosion coming in silver than I am what the precise day of the low will be. So people should focusing, if they're looking at the commitment of traders and all the things that are going on in the physical market and the regulatory scene, that they should be aware that even if you miss it at the bottom by a little bit, you buy a little bit prematurely and the price goes down, you're going to be compensated on the flip side. When this thing turns around, you're going to forget how much you missed the bottom by, I believe, because the market is going to, and silver is going to really fly to the upside whenever we're done with this sell-off.
Very quickly, any regulatory developments?
Big one. Today, the House of Representatives passed a landmark legislation, the Wall Street Reform and Consumer Protection Act of 2009. It's got a long way to go. It's got to work out through the Senate, et cetera, and it's not going to be enacted anytime soon. But I would like to point out that the CFTC chairman, Gary Gensler, spent a lot of time on this, working with Barney Frank on this, and he seems to be very pleased with the new regulations that are proposed for over-the-counter derivatives. But one thing I would throw out is that I think this has been one of the things that may have been holding up the Commodity Commission from introducing their proposals on speculative position limits for energy and perhaps the metals. And I think now that the House of Representatives has passed this landmark legislation, that we may hopefully be hearing soon on speculative position limits from the CFTC.
Well, Ted, thank you so much for joining us. And as usual, for people interested in your newsletter, we'll have something right on your interview page, and they can click on that and find information on how to subscribe. So thank you again for joining us.
Thank you, Eric, and have a good weekend.
Thank you for joining us at KingWorldNews.com. Remember to tune in next week where we will have David Tice from the Federated Prudent Bear Fund, as well as Bill Fleckenstein from Fleckenstein Capital. And make sure you don't miss the interviews this week on the homepage, particularly Nigel Farage from the European Parliament. Absolutely unbelievable interview, as well as the one with Lord Christopher Monckton, also a riveting interview.